Hey traders, Raghee here. Let's see. We got the YouTube folks in the house. Let's see. We've got the training room in the house. Great to see everyone. Happy Thursday, everyone. Happy initial claims morning Thursday. Data came in better than expected. We are generally in an environment where quote unquote good news, good data, in this case lower unemployment claims, is actually bearish for equities. But it's probably going to take a whole lot more than that to undo NVIDIA, right? NVIDIA came in and said, Wall Street, you have underestimated our revenue by half, I believe it was. So a lot of good news from a heavily weighted stock. Now I say good news because it's good. What's good for NVIDIA, and I'm going to pull up, actually, let's use some trading view charts this morning here. All right, let's pull up some trading view charts. So if we pull up NVIDIA, you take a look at that daily time frame. Yeah, we're looking at ultimately what's going to be a really, really strong morning. Now, why would the market care? Remember, gang, when we take a look at the S&P 500, less than 15 stocks make up 20% of the weighting. If you take a look at the NASDAQ, it's again that disproportionate. The idea that all the stocks matter in the universe of stocks is categorically incorrect, because when you look at the way the major sectors, tech, healthcare, financials, communication, consumer discretionary, when you look at the three major indices, Dow, NAS, S&P, they all are ruled disproportionately, right? Disproportionately weighted by a small number of stocks, by a small number of sectors. So when you have one of those stocks come out with huge news, you're going to have a significant move. And obviously, that's going to be the case with NVIDIA. And then that's going to pull the sectors and the indices that have heavy NVIDIA weighting with it. Now, tech has generally been a bad place to start thinking about calling a top, right? In fact, if you've been following any of the free videos that I've been posting in the Simpler YouTube channel, you know where we sit in terms of expectation on what it is I'm expecting from the NAS. And that's, gang, higher highs. Would I love to see some significantly lower lows? Yes, because that would push price down into the volatility support of the gray zone on the daily time frame. I would love to see some weakness, but I'm not about to call a top, right? We don't do that in trends unless we hate our money, in which case, feel free. But ultimately, what we want to remember with the NAS is it is an uptrend. However, when we jump on over to the S&P, we jump on over to the Dow, not that those are incapable of transitioning into uptrends. The Dow is still lagging. The S&P is benefiting from the strength in tech. But the bottom line is, as long as financials are struggling, and as long as healthcare also is struggling, it's going to be very difficult for the Dow and the S&P to move with the same type of trend strength to the upside that the NASDAQ is, right? It's, again, disproportionate weighting of stocks, also disproportionate weighting of sectors, all right? And that's why the NAS is able to do its own thing. And the Dow and the S&P are having to work a whole lot harder to cover ground to the upside, because it's only really one cylinder firing away in those two indices, and it's tech. And that's why the NAS can do what it does. It's not weighted down, quite literally, by financials and healthcare. And that's where we sit, gang. We'll continue to look for a lot more optimism on the tech side of things. That's going to help the S&P probably second most, the Dow the least, because the Dow's number one weighted sector are financials, right? And financials are going to be lower today. So financials don't give a rip about NVIDIA's rip, right? Tech will, right? Think about where NVIDIA is heavily weighted. All right. So with that being said, as always, if you have any questions, let me know. Feel free to type them on in. And I don't know that I have, actually, let me check something here. I don't know that I have the pre-market running on, do I? Let's see. I'm trying to see if I have the pre-market running on, running on TradingView right now. We might jump on over to pre and post. Yeah, there it is. There it is, pre and post. Okay, so when we take a look at what's happening with the broader averages, oh, that's what it is. I'm not logged into my TradeStation on TradingView right now. Okay, so you know what? Just to save some time, let's just jump on over to TOS. If we do take a look at some stocks, I'll jump back on over to TradingView. If you are looking at futures, gang, please make sure you've got either the feed from the CME or you've plugged in the feed you get from your brokerage into TradingView. Otherwise, you won't be looking at live futures data. All right, so there's your NASDAQ punching up to, let's see, the high on the 19th was 13,960. So obviously brand new high on the NAS, thanks to NVDA. Hey there, Ann, how are you? This week in the markets helped me. Oh, that's super nice of you, Ann. I appreciate that. I appreciate it. What's your favorite section in it, by the way, since you brought up this week in the market? Let me know what your favorite section is. I would love to know. I appreciate that, Ann. Thank you so much. Yeah, I've been doing this week in the market now for about, I don't know, a month and a half, 2 months, I guess, now. And we're continuing to evolve what we're doing with it in terms of reducing the jargon, reducing things like requiring, custom or proprietary indicators to understand the analysis, which is really not helpful to a lot of folks. And then also, covering sectors, covering indices, covering treasuries, currencies, commodities in such a way that we can take a look at what the bigger picture of the equities overall direction is. And we've been quite bullish. In fact, a bull is it's the logo on the newsletter, not because I'm always bullish, but there is somewhere we can find a trend like that. And right now it's still pretty much the uptrend in tech. All right, so let's get to it. Let's see what we have here. Kim asked, do I think it's a good time to invest in AI? We're probably looking at the very beginning of that. And there are a small list of AI stocks I'm looking at, Kim. I mean, probably some of the broader strokes. Look, I would in no small way credit some of what's happening with NVDA with AI. That GPU, from what I understand, is a big part of what's going on with AI. I'm probably not as up to speed as I need to be. I'm using it more than I'm probably looking at stocks. I'm a big Chat GPT fan. You like the charts in this week in the market? Cool. And okay, awesome, man. I appreciate that. Thank you. Yeah, Kim, I think there's some basic places. Microsoft. We saw what happened with Google when they released what they're doing with Bard. You can see what's happening with NVDA. I think that's AI related. Yeah, I do believe that's AI related. And then, yeah, you're starting to see some ETFs emerging with that AI theme. And that will be something we will definitely dive into more in the Sector Secrets Mastery. Absolutely. All right. So what do we have to kick off the morning on our YouTube channel? Hey there, editor. Any thoughts on why tech gapping up, waiting for a pullback? Yeah, NVIDIA, editor. Yeah, NVIDIA. That's why tech is up, right? But you're looking at NVIDIA, or you're looking at AMD on the daily. Sure, let's go take a look at AMD on the daily. It's in an uptrend. That's number one. Buys in, well, take a look. If we're looking at NVIDIA from the standpoint of A, it's an uptrend, and B, we have bullish bias, and we want to be buyers at a quote unquote dip or support. Right now, the best way to define that, the best clear way to define that, you can see here is just buy the DPMR, whether that be the 15th, the 16th, the 17th, the 18th, the 22nd, and we reached on the 23rd. We might have touched on the 23rd. As we look into today, sure, if I can get a move down to about 105.20, let's see, let's be a little bit more specific. Where would I have to move down to? Yeah, it's about 105.20. That would be another buying opportunity on AMD. All right, next up is, would I take profit on NVDA on a move like this, megawatt? If you've got a position an NVDA, and hopefully you've got a position NVDA to the long side. I couldn't imagine anyone looking at this green trend and thinking, I want to short this thing. Again, there's got to be some self-loathing going on traders who see an uptrend as strong as this and want to short it. So great question, Megawatt. Would you? Yes, yes. Never look a gift horse in the mouth. If you got a trade going on and you wake up to what something like Nvidia is going to give you first thing in the morning, you don't have to get flat. I think that's the thing that a lot of traders struggle with when they're trying to take profit, because they're looking at it in a very binary on-off way. Either the trade is on and I'm making money, or it's off, right? Realize we're going to be opening just under $400, right? Okay. When you wake up to 100, what is basically a 90 some odd point move from 300, the idea that we can continue, well, sure, there's a very good likelihood, but why not scale out of 1/4, 1/2? So again, I think a lot of traders are looking at trades going from A to B. It's a very binary. I've got the trade on, I've got the trade off. Back in the olden days, the way that I was taught to trade was scaling in and scaling out, having a predetermined, not adding to a position, things like that, not defending a position, just having a predetermined series of usually 3 price levels that I would scale into, and then having 2 to 3 levels that I will scale out. So if we think about that approach, you don't have to get flat, right? Just scale out, pay yourself a little bit, move to a break-even stop. That's the process that I still use, 30 some odd years into my career. And it works, and it does work. And it does work. All right. So next up is, let's see. Stephen asks, I was wondering, on my platform setup for order entry, do I use chart trading or depth of market, dome trading? Stephen, I actually use either. I just go to the order tick. I'm pretty basic when it comes to order entry. And because we're not getting in quickly or getting out quickly, we have a nice, what I try to incorporate is a slower pace of order entry. I just pull up the order ticket on whatever platform I'm using. Could you use chart trading? Sure. Could you use depth of market? Sure. Level 2. But I don't. No, I try to keep it really basic. My idea, Stephen, is bid, ask, and last. As long as I can get a pretty good idea of where the buyers are, that's the bid. Where the sellers are, that's the ask, and where the deal's being done, that's the last. But as long as I can see that, I've got a good idea of how I need to fine tune my actual limit order to get in or out, or stop order to get in or get out. I can do that most effectively with just bid, ask, and last, and that's fine. So just sort of level 1, if you will. I don't need that depth of market. I don't need level 2, right? Sometimes too much information is not necessarily helpful. So I don't really encourage a lot of traders to look at depth of market or level 2 for that matter. Even for day trading, I don't. All right. Thank you for the question. Let's see. Next up, do I see the current tech rally as part of a blow off top before a correction? Why? Earl, why? That's always the question I ask myself. Why would I presume a trend is going to stop? Right? I think that there's this idea that something can be too accelerated. How long has Nvidia been powering the NASDAQ? Probably not that long. Today, it's obviously getting a disproportionate boost. But is this just about Nvidia? No, of course not. We have strength in Apple. We have strength in Microsoft. We have strength in Meta. We have strength in Google. Right? There's a lot of individual pieces that make up all the heavily weighted stocks within the NASDAQ that are doing very, very well. If I've got an uptrend, the last thing I'm asking myself is, where's the top? That's the wrong, for me, that is the wrong question to ask. For me, the question to ask is, where's the pullback that I can buy? If the train's going, let's just use something silly, but if the train is going up, am I going to presume that I know where the next stop is? Or am I just going to ask myself, how do I catch the train? Right? So that's the way I look at that. And I think that this idea, now flip it around another way, Earl. I call top picking and bottom picking a revenge trade, because frankly it is. And this is why. If you and I are already long tech, Earl, do we care about a blow off top or we just want to keep seeing the market make higher highs? So it's really a reflection of what we think our next opportunity to engage the market is. The only folks looking for tops are the folks usually that are not already as long as they want to be or long at all. So again, I don't know what the case is for you, Earl, but again, generally speaking, it's a revenge trade. So would I presume to even know to guess the future? Because that's a future asking question, right? Let's be really frank here. And this is a great question. That's a Raghee, can we tell the future question. Please don't do that to yourself. I don't even know what I'm having for dinner tonight. Nevertheless, whether or not the NASDAQ is going to put up a blow off top, right? So let's follow the trend as long as it's in place. Let's not buy at higher highs. Let's wait for pullbacks and look at the pieces of the index that are contributing to the strength. It's not just NVIDIA, right? And we feel much more comfortable following the trend because we know it's supported by many, many heavily weighted stocks in those heavily weighted sectors. All right. Next up is, let's see, 007 asks, if tech is up so much, how come crypto is not following? Why would you assume it's a crypto trade, 007? What's the assumption there? Why would I assume what's good for NVIDIA is good for crypto? Now, the other way around is probably true. What's good for crypto is good for AMD, good for NVIDIA. But why would we presume it's the other way around? Clearly, it's not. Clearly, there's another narrative, right? And that's the answer. Because it's not, right? Because it's not. All right. So let's see. Oh, Trish just reminded me. I do know what I'm having for dinner. All right, gang. Yes. You know what? I was incorrect. I gotta recant that statement. I do what I'm having for dinner. There's a new ice cream shop in town, and yeah, I'm having ice cream for dinner. That is true. All right. Yeah, we're going. The wheels are coming off the wagon today. Ice cream for dinner. It's a new. So before you judge me, no colors, no preservatives. They churn it in the shop. I think it's a local firefighter who started up the store. So very excited for the no colors, no preservatives, made on premises ice cream dinner. That almost sounds healthy, doesn't it? We can talk ourselves into anything, can't we? Can't we? All right. So 007 and Earl, thank you so much for the questions. All right. Jane said I would never judge you for ice cream. All right. I appreciate that, Jane. I judge myself a little bit. I think I judge myself a little bit. All right. Let's move on to some more questions here. And let's see. Alex says, I feel editor's pain. I too was caught off by NVIDIA. Thought all the highly weighted companies are reported. Never again. Alex, thank you for your honesty. Thank you for sharing that because look, I used to do the same thing once upon a time. I would miss the earnings. This is what I like to do. And I know, and again, it's not dogging any of the other sites. Believe me, it's not. Uh, I I know a lot of folks like to use um, earnings whisper. And what happens, I think, when we use and I'm not saying this is the entirety of their service. I've not spent a lot of time in their premium service. I think it's earnings whisperers, right? Okay. The problem with a lot of these sites is that the free version gives you, and I don't even know if I typed in the URL right, but the free site gives you just what's coming up and what they deem as important as far as what's coming up. Yeah. I want to choose, I personally want to choose what I think is important. I want to be able to look at a list of names and say, look, these are the names I want to follow. And again, I don't know, they're the most popular. That's why I'm using them as an example. So earnings whispers people, if you're listening, call me. There's ways that we can make this more useful. If we have Estimize, which is my preference, Estimize lets me search for the stocks I want to follow. And by the way, free, right? All you need to do is use, I think, Twitter, Stock Twits, one of your already existing social media logins, and you have free access to Estimize. And it's a very good, robust free version. It's really freemium. I can follow the stocks I want to follow. And then look at this list, gang. It's not what's coming up tomorrow. It's not what's coming up next week. I can look out. Look at this. I can look clearly out to August. And Alex, I think you're so right. A lot of times we're using these very, sort of, here's this tiny little view. It's a very myopic view of what's coming up. And if we don't glance at all the little logos on the calendar, we miss it. I like this list. This is what keeps me out of trouble. Am I going to single-handedly credit Estimize for making sure I don't miss earnings? Or even better yet, I'm prepared weeks ahead of time? Absolutely. So Alex, listen to me now, believe me later. Go get a free Estimize. I don't really know these people. I don't know if they've sold it since. I knew the person who initially started it, and that's why I got interested in it 4 or 5 years ago at least, if not, oh gosh, no, way longer than that. Way longer than that. Anyways, but I love the service. I love what it does. And it does it for free, right? So I can track the stocks I want to track really easy in a list. And for me, that helps. So I hope that helps you, Alex, because if I were not looking at this, I'd get blindsided too, right? This saves me from things like, oh yeah, who else? And by the way, who else is coming up? Right? Medtronic's coming up. That's going to be an XLV impact. Costco's coming up today. Gang, CRM. We talk about NVIDIA's impact on things. CRM won't have quite the impact. And remember, NVIDIA's impact is not only the weighting it has, but the outsized move that it made. That's why NVIDIA is like an earthquake this morning, because not only is it heavily weighted, it had a Godzilla-sized move. CRM is still out there, right? So there are a number of fairly heavily weighted stocks that are still coming up this week, right? So check out Estimize, follow the stocks you watch, follow the stocks that are heavily weighted in the indices and sectors, and it is a whole lot harder to miss earnings. All right, gang, as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other.